All right. My name is Chris Campbell. I'm a practicing CPA and I work with small businesses and individuals to help them pay the least amount of taxes possible while keeping them out of jail. So today I wanted to talk about a question that I recently saw come across online. And this is specifically for S corporation owners. Specifically, let's say you have a one person, two-person show and you own all of the stock in that corporation. As many of you may already know, the way the taxation works with the S corporation is that the owner has to pay the taxes personally on the profits of the corporation. So the corporation itself does not pay taxes. The owners report the profits of the corporation on their personal return and pay the taxes that way. A question did arise, and they said, if I'm paying the taxes on company profits, then how do I actually pay those taxes, being that in many instances, the profits from the company are still stuck in the company? Say the company cleared $100,000, you personally have to pay tax on $100,000, but you didn't take that $100,000 out of the company. That $100,000 is still sitting in the company bank accounts, not yours. How do I go ahead and cover that tax bill? So in this case, the company can go ahead and pay the taxes on behalf of the individual. It's just a matter of how those payments are classified. With many of my clients, when those payments are made, and it can be made directly from the company account, it would be classified as a distribution because it's something that's paid for on behalf of the owners. It's a personal expense of the owners. So even though it may come directly from the business bank account, it would be treated as if the money was distributed to the owner and then the owner went ahead and paid the taxes. So it's okay to pay those taxes directly from the company account. Now, one thing you need to be careful of when you are taking these distributions out, you want to watch out for having what's called a negative basis in the stock. Essentially, to try to simplify it as much as possible, if you take out too much money, that's in excess of what you put into the company, because you're not paying this out as a salary. You pay yourself a salary as much as you want, but keep in mind the tax benefit of the S corporation is to limit your salary as much as possible so that it's reasonable, but you want to avoid the self-employment / social security tax. So we want to limit what we're actually classifying as salary, and then the rest of our compensation, we want to take that as distribution. So you need to be careful with the distributions part though, because you don't want to put yourself in a situation where those distributions are essentially more than what you've put into the company and what the profits are. Because if you go into what's called a negative basis, then you can wind up having to pay additional taxes. As far as trying to keep it as simple as possible, you can wind up paying additional taxes on those distributions that are in excess of what you either put in and or earned from the profits of the company. So you want to be careful with that when you're making those payouts. And it's the same treatment with any other personal expenses that you may pay directly from your corporation. It would just count as a distribution. And while it was on the subject, one main thing that I see with some S-Corp owners that don't take advantage of this is that if you're in a scenario where we have to pay health insurance, and I know many owners, if it's a small entity, like one or two people that are in the business and they're owners, you don't necessarily go out and buy group health insurance. You still may be in a situation where you're going to the marketplace, the healthcare.gov type deal to get your health insurance personally. So if you are doing that and you own an S Corp, you're going to want to make sure that the company are actually paying those premiums. Have them paid directly from the business account for that. I've seen many folks just pay it from their personal account. And because it's not recorded within the books, they're not fully taking advantage of the health insurance deduction. So if your company is paying that, and again, this is specifically for S corporation owners, if your company is paying that, it is treated as compensation to you as the owner. However, on your personal tax return, it's deductible. It counts as a deduction for the business, and then it counts as a deduction for you personally. So you want to make sure that you have that trail of those funds coming from the business bank account and not your personal. Don't get that tied up in your compensation. Don't take it out of your regular salary. Have it come directly from the business to fully take advantage of the full write-off of having health insurance. So that's all for now. I hope this was helpful. If you have any more tax or accounting related questions, feel free to reach out. I'm happy to help. All right. That's all for now. And I'll talk to you in the next one.